As Bitcoin continues to grow and shape the financial landscape, various investment vehicles have emerged to provide exposure to cryptocurrency. Among them are BITO, YBTC, and BTCI, which are notable options for investors looking to benefit from Bitcoin's growth without directly holding the asset. Each of these investments offers unique features without directly holding the asset. They have their own risks, benefits, making it essential to understand their differences before making any investment decisions. BITO is an exchange traded fund ETF that provides exposure to Bitcoin through future contracts rather than direct ownership of the cryptocurrency. It was the first Bitcoin linked ETF in the United States, offering a regulated way to invest in Bitcoin through traditional brokerages such as Robinhood, Fidelity, and Vanguard. Some of the key features of BITO include futures-based exposure. So instead of holding Bitcoin directly, BITO invests in Bitcoin future contracts traded on the exchange. Traded on the Chicago Mercantile Exchange, the CME. And best of all, you have very great liquidity and accessibility. So investors can buy and sell shares on major stock exchanges, making it a convenient option. In addition to convenience, you can also have that security because BITO is regulated by the United States Securities and Exchange Commission, the SEC. So because BITO does not hold Bitcoin directly, it has those futures contracts. BITO is subject to risks considering the underperformance compared to Bitcoin's price. But on the upside, we actually have dividend yields. And right now it's sitting at 81%. So even though the stock price of BITO is down 56% all time, you are making that up with its nice dividend yield of 81%. If you take a look at the dividend history, you are getting that dividend cash payout every single month with an annual dividend of around $14. If we take a look at the history of its distributions, we can see it is very variable. So you have dividends as high as $1.50, $1.76, and as low as 35 cents. So you do have to keep in mind that with the Bitcoin of BITO's dividends are going to be variable as well and very volatile. So next we have YBTC, which is a Bitcoin spot ETF. YBTC represents a spot Bitcoin ETF, which holds Bitcoin rather than future contracts. And this is different because it actually is a covered call strategy, so it's selling covered calls on Bitcoin's ETF. And the benefits of this ETF, you actually get weekly income because we're generating that income through covered call strategies on BITO. However, because this is an actively managed ETF, you do have a higher expense ratio of almost 1%. And that goes to the fund managers because they have to open and close these option contracts every single week. Now, if we take a look at the stock price for YBTC, it is down 22% all time, but it makes up for it with a 62% dividend yield, and that is paid out weekly. So you're getting a nice weekly paycheck every single week. And compared to the other ETF, BITO, this one has a little more reliable cash for its dividend. So it's nice to see that you're receiving a reliable, steady dividend every single week. Next, we also have another Bitcoin covered call ETF, BTCI, and this one is by the fund NEOS. So unlike YBTC, this one actually pays out monthly and it does have a high expense ratio of 1%. BTCI refers to a Bitcoin trust, a structured investment vehicle that allows institutional and retail investors to gain exposure to Bitcoin through a traditional financial instrument. Now, unlike an ETF, BTCI operates as a closed-end fund, meaning shares trade at a premium or discount to Bitcoin's net asset value. If we take a look at the stock price, it is pretty flat when it first opened. 2024 of October, it does have a lower dividend yield because it is a more stable and more stock appreciation than the other ETFs for Bitcoin. If we took a look at the dividend history, the dividend information, 14.13% yield. So you're getting on average about $7 every single year, and that is paid out every single month. So if you want a more reliable ETF that tracks Bitcoin and gives you that nice income, BTCI is a great ETF. And I'm a huge fan of these NEOS funds that also come out with ETFs such as SPY-I and QQQI because the NAV is very stable compared to other covered call ETFs like those from YieldMax. And if we take a look at the dividend history, we can see these cash amounts for these distributions are very reliable. You're getting on average $1 to $1.50 every single month. And you can use that to reinvest back into this fund and grow your shares. So if we want to compare all three of these ETFs, we can actually see that they are positive return since October of 2024 compared to the S&P 500 SPY, which is actually down 6%. And this is total returns. So you have to keep in mind that this is with dividends reinvesting. So YPTC is actually only up 3%, but it is beating the S&P 500 index. BTCI is at an 11% return, very solid return, and BITO, which is the Bitcoin strategy by ProShares, and that is going to be 14.72%. Now, over the past few months, Bitcoin has been very volatile and has seen great stock appreciation. So, for people who don't have a way to invest directly in Bitcoin, some of these ETFs are a great option. Not only are you getting distributions from these ETFs, whether it be weekly or monthly, it is a great way to get some crypto exposure in your traditional brokerage account. You don't have to open a cryptocurrency wallet. This trades just on the stock exchange, and it's a very convenient way to invest in crypto without actually owning any crypto. So which one of these options is best for you? So for short-term investors, BITO might seem like a great choice for people who want exposure to Bitcoin without owning it. However, those future contracts, as we mentioned earlier, may lead to tracking inefficiencies over time. But for people who are long-term investors, BTCI would be my can be useful for institutions that prefer a trust structure that comes with drawbacks. And as we mentioned earlier, BTCI has been fairly reliable in its stock price. It really hasn't dipped that much, but we have to keep in mind this fund has only been out for a few months. And while it has the lowest dividend yield of all these ETFs, it is my pick because NEOS is a great fund. They've done a great job with SPY-I as well as I, and BTCI has seen a very high total return since inception.